Welcome to Commodities, and here we're looking at gold on the 4-hour chart. And look, as you probably know, we were looking at this move coming down through here, expecting a bounce off the 1272 here, bounce off 1275. The move up here appears to be impulsive, but it's not finished yet. So we'll see it move to 1310 and then have an A and a B and a C correction, and then should push high from that point. In terms of trading, let's just drill in here a little bit. This is what we were tracking last week. We were looking at this A, B, and C wave here in 5 waves and looking for an impulse wave to the upside here. Just drill in here a little bit. Yeah, so the little impulse wave to the upside, we're looking for wave 5 to move up through to here, roughly. Then some type of ABC correction, and then start moving up in another 1, 2, 3, 4 up there. So look, in terms of trading, it's best to allow wave 5 to occur and then observe some type of correction here. Basically, you want to see it move down in 3 swings at minimum below the 1300 here, and then develop support on there. And if the support is strong enough, and it's got to move up and so forth. So yeah, so if you imagine this picture over, see if this picture here is an A, B, C and 3 waves. So if you can imagine a larger one of those here, but when it comes up for wave 1 here, you have to allow wave 1 to complete. So you've got reference points. You've got that reference point and that reference point, because if you're going to go long from here, for example, you need to be going long on the breaking of that there, and then also work with the closest largest number here. So support on 1303, the top of a little micro group 1 would be the case. It's important to get that right, because the other side of this coin too is this can be 1, 2, 3, 4, 5 to here, and then fail from here and go down for 1, back for 2, down for 3, 4 and 5 here as such. So if I come back to here, this whole move that we've been looking for here is an A and a B and 5 waves for C. So it can finish at that point there, but I believe there's a bigger picture unfolding to the upside. But of course, I can't confirm that just yet, but that's what we're looking for. So 5 waves, and then an A and a B and a C, and then that will tell us that ABC, once that's confirmed, that will tell us that we're going to get more upside, we're going to have a bigger picture, but we've got to get past that junction first. The silver market, just looking at the daily chart here, we've been looking at a different structure than gold, but we've been looking down for 1, back for 2, 3, 4, and down for 5. It was a little bit hectic in this area here, but it's probably fallen in place now. So once again, we can actually have quite a large move coming through here as well. I've got this labeled as wave 4 here, which is part of this structure through here. I know there's overlapping wave structures here, but anyway, let's see how we go here. We should see some move up into this area through here. And the wave count up's the same as the gold one as well. We're looking for 5 waves in this as well. So 1, 2, got the strong 3rd wave there. We'll need the 4th and the 5th, which will take us up to $2,020, sorry, and an ABC correction from that point. So allow that to play out. You can go along from here, but you need to keep the stop well out of the way down through here. Supporting this is the copper market as well. Late last week, we were looking at, from this high here, we were looking for a move down, and I was looking for a possible 5 wave structure to the downside, but that's not the case. So we were looking at down for 1, 2, and we could see this 3rd wave here. So I was looking for a 4th wave and then a 5th wave down, and it's not the case. So we've only got 3 waves down from this high here. So we've got the same pattern as gold here. So it's not developed in 5 waves yet, but it certainly could. So we'll be looking for the 4th wave and the 5th wave up through to here somewhere, and then A, B and C here, but we don't have the 5 waves yet here, so we can't confirm that, but it's most likely. So 5 waves up, then an A, B, C here, and then a move up from that point. I mean, that's important because it will support the materials sector for commodity countries. The oil market, Yeah, so look, we've been tracking, just to come back a little bit, we've been tracking from the 105 here, 5-wave structure to the downside in terms of the 1, the 2, and then all the way down here in 5 waves for the 3rd wave, the ABC for the 4th wave, and then the 5th wave here. Now, this is also not showing us an impulse wave to the upside. We've only got 3 waves here and it looks corrective. So I just suggest we just chill out, wait for this market to develop a little further, and let's see if we get support on 100. If we get a nice solid support there and we do get a rough looking sort of impulse wave up through here, then we can go long from that point there. The daily market is deeply oversold, so the direction is up off this low here, so pretty much buying on 100 there, but you want 100 as support, not resistance, and you can see that most of the price activity is under the level, and you really want that above the level, and then you want a reference point and then go high from that point. The gas market is a little bit softer as well, but we're expecting it to come down to the 465 area in terms of an A wave, a B wave, and then the C wave in 5 waves here, which would be the 1, 2, 3, 4, and 5 here. So we should see the bounce off here. Yeah, let's just sort of see how we go. If we get support on 472, then add to positions there. The all the grains, I think from memory, are weaker, but we can expect a bounce. So looking at soybeans, starting with here on the daily chart, just to sort of drill into the bigger picture here. Look, basically we're looking for a correction across the 1500 there. The wave count we've got is as it is there, but you know, it does have a 3-wave correction here, so it could just continue straight to the upside here. That's a possibility. I would expect a larger correction here as well. Let's just sort of see how we go with this, but what we'd been looking for last time we spoke was, well, look, from wave B here, we're looking for 5 waves down for wave C of A here. And yes, this little move up through here would be, because we can only count 3 waves down here so far. So this would be the 4th and the 5th wave. We need that for the C wave. So we're looking for 38.2 retracement level, which comes in at 1474, I think. Yeah, I'll just go in another level here. So look, the main point here is a strong 3rd wave down here, and 38% of that comes in at 1474, I think it is. So yeah, this whole area of group 2 here, looking for that to develop as a resistance there. So let's just sort of see how we go with that. You know, if we do get support on here, we do get support up here, then we're left with 3 waves here, then we know we've got a bullish picture on our hand. So, you know, if you want to be brave, you can go long on 1472 tested support and keep the stops sort of out of the way here. This is also can be viewed as a retest of the 1500, but you know, I was just expecting one more wave to come down first and then up here. And not that it's going to make any difference in the bigger picture. We're not really trading this market just yet. The wheat market as well, you know, it's got the same sort of thing as soybeans up here, you know, the swing across here. We're looking for wave C to move to the downside here and then move up from that point there. But yeah, look, once again, we do have, you know, a corrective pattern across here. We need to be mindful, and we wouldn't want to miss a trend to the upside. So we would be looking to scale in on 720 and 730 if that was going to be the case. So we know that that's the current high here. It's not such a bad picture, actually. Forget about that wave 2 here. We're considering that to be over here, and this wave C over here as well. But this move down through to here, then an A and a B and a C wave here, and the C wave here is in a nice 5 waves here. That's why we've got it there. So we'll just sort of, you know, I don't know, just sort of, you know, considering this being the top here and having a moving down through here. But if the 720 becomes the support, you know, then we need to be thinking long, and we need to be, you know, building positions in on 720 and definitely 730 as a retested support. So that's something that we'd be looking for. So yeah, look, as it stands, we're looking for failure here and a move down through to here, but we would be looking to go long on 720 support and 730. So if you see that, then you know what to do, because the trend would just be pushing up from that point. The corn market, it moved down quite swiftly from the high that we were looking at through here, and once again we're looking at a larger correction across the 500 here. In line with the other commodities doing their thing as well. The 50-60% retracement level is in this area down here, so it's quite a way down, and we're up here at the moment. Once again, we've just got to chill out, allow the market to have its corrective move, and we'll take it from that point there. The little move down through here is in 5 waves, so we've got 1, 2, 3, 4, and 5 in the third wave here. You can sort of see the 1, 2, 3, 4, and 5 in there. So after 5 waves, we get an A and a B and a C coming back. The 50-60% retracement level is below and above 510. So basically a bounce to here and then further downside to come there. The coffee market, same here as well. No real sort of setups here just yet. We're just looking for this 5-wave structure to the upside here as wave 1, and we're looking for some type of correction here as wave 2. Look, if we're wrong, then we would be looking to use group 1 here, 10, 20, and 30. So support on 10 to 10 here would be what we've been looking for sort of all last week, really. If this found support here, we would simply glean a small position from that point there. But this high from here, anyway, look, we'll just see what happens. We're expecting it lower. If 210 becomes support, then get a position here, one position, and we can look to build on that if that's going to be the case. But there is risk at this point because we normally go long on top of group 1, which is 30 here, but I'm just anticipating a new high here, and if that's the case, then we want to be here, we want to be adding here, and we want to be adding on 230 as well. We don't want to miss a direct trend straight to the upside. But look, all those markets are working with large numbers at the moment, so corrective activity is pretty much the sort of the primary situation at the moment. Alrighty, sugar has sort of fallen quite quickly, but should bounce back from this point, this low here, and still can be counted as up for 1, an A and a B and a C correction here, and completing right where it is here. So if it breaches this low here at 1731 here, then we know that we've got an overlapping wave structure and we've got a bearish picture in tow here, and that's why we've got our stop at 1726. So we just need to allow this to ride out, but I would say that the next session is going to see a move to the upside, and yeah, let's just see how we go with that. The orange juice market. Orange juice has got a bit of a mind of its own, actually. It's not a grain as such, so it's in a different basket. So we're looking for a sort of a retracement level back into the sort of 54, 53 area here. Look, we may not get that. That may be the low there. It does sort of fit as an A and a B and a C wave 2 here, so we can have the low in here, but I can't confirm exactly what this is here to pull it apart enough to actually understand it. So it's just not clear enough. If the market found support above this little consolidation here, because that's where the supply is, the sellers there. So if that becomes, it's resistance at the moment, isn't it? If it became support over here, then then you can go along from that point there. So there's a couple of steps that's the 161 in here. So we could say that support on 160 would be would bring our attention to possible longs, and then you can use 61, 62, and 63 to move in from that point there. The daily is deeply oversold here and giving a trigger to buy, but we need support there, and we don't either support or confirmation in the wave structure, and I don't have that in the wave structure yet. So we need to look at support, and support above this first level of supply here is what we would require. The US dollar, just while we're here, is still below the 80, so it does, it's healthy for commodities, and would expect this to move lower as the euro moves higher. So nice resistance there now, as you can see. I mean, of course, this just sort of helps buying commodities because they're traded in US dollars. That's all. Alrighty, well, that's it. Thanks for listening.